Hello, everyone. Pam DuBois, Dream Real Estate TV. I am so grateful, happy, excited to have with me today Hannibal Collins from New York City, credit specialist, realtor, investor, and entrepreneur. Hannibal, thank you so much for being with us. We're so excited to have you. You're going to share so much with us today. First, tell us a little bit about yourself and what you're currently doing.
Well, my name is Hannibal. I'm the executive director of FICO Finesse. I do affordable and effective credit repair. I help people improve their personal credit and establish business credit. I want people to have ownership of homes, ownership of businesses. I want people to be able to employ their communities. I want them to be able to have generational wealth. And a big part of that is having excellent credit. So I help people fully understand credit, all of the 5 factors of credit, how they can improve it, what the game plan is to do so. And then I break down for people everything that's not 100% accurate on their credit reports. If things are not 100% accurate, you can legally remove them. So that's what I do. I pretty much teach people financial literacy. I also have been doing real estate for the past 10 years. I was a realtor for the past 10 years. I also managed luxury buildings downtown Brooklyn as well. So I did some property management, and I worked as an acquisition manager for a real estate investment firm. So real estate, tech, and finance is pretty much my background. And I have a lot of miscellaneous endeavors this year. This year's been a productive year. Right now, I'm currently working on an event in New York City. It's going to be on October 16th in New York City, 2021. I'm also launching an academy with some business partners where I'm teaching credit. They're teaching Forex, they're teaching Airbnb, they're also teaching renting cars with Turo. So that's called the 7-Figure Academy. But yeah, I'm just doing a bunch of stuff, trying to be productive and serve our community. So.
Wow, that's a lot. That's a mouthful. That's a lot.
Yes.
What are you currently seeing going on right now? Let's talk real estate for a bit as far as real estate in the New York City area. You said Brooklyn is the area that you're actually specializing in?
Love Brooklyn, born and raised. I'm passionate about Brooklyn. And yes, I specialize in downtown Brooklyn at the moment.
Okay. Are you seeing, because like in the area, we had a lot of multiple offers, inventory really low, and market still that way?
It is still that way. New York City has always been an in-demand market. I think the rest of the country is very in demand and saturated, but New York City, well before the pandemic, was that way. We always had about a 3% vacancy rate. We always had a lot of residents, about 8 to 11 million residents. So supply and demand makes New York City really expensive. And it's a top 5 world destination. When you're from New York, you're really, you're over it. You've seen the Statue of Liberty, you don't really care, but people come from around the world to see Wall Street, Times Square, the Empire State Building, Statue of Liberty, World Trade Center, all that type of stuff. Broadway, people all want to be here. So if everybody wants to be in the greatest area of New York City, then it's going to be very expensive. And it's definitely the same way the rest of the country is. There's shortages on everything. There's shortages on even chicken wings. So
Really?
Yeah, there's shortages on wood, lumber, everything is really, there's housing shortages. So real estate is really expensive at this moment.
Yeah, the market is kind of crazy right now in New York City. New York. Yeah, I haven't been in a long time, but I know when I went to visit, it was beautiful. Great place to visit. Talk a little bit about credit repair for us, and if someone actually they're looking to buy a credit score of maybe 550, what would your thoughts be on that as far as helping?
Typically from my understanding and from my experience, most lenders are looking at minimum of 580. That's bare minimum. I think FHA guidelines are almost even 620 or so.
Yeah.
And then some lenders have what's called an overlay, where they might have requirements on top of that for it to be above a 620. But I would say from my experience in landlords or just homes and lending and everything like that, where people really want you to be is at a 680, because that stands for very good. You want to be as low of a risk as possible to buy. So you can get by with those bare minimums of 620 or 580 arguably, but you don't ever want to be in that position where you're doing that, because 1, you have to pay more. 2, you might get rejected. And when the pandemic first started, people got approved at a 580 or 620, and then by the time their loans had to close, the banks rescinded it because we were in a time of hardship. So you never want to be somewhere where things are in flux. Also, you don't want to focus so much about your score. You want to focus on the content of your report,
Okay.
because that's what really matters. I've come across people that have a 720, but they have a repossession or a bankruptcy on their record. And the analogy I give people is, let's say that I wanted to sell you my car, right? And I made it look great on the interior and exterior. I painted it, I gave it, a car wash. It had, incense and things in the cars that looked good, it smelled good. But if you looked at the Carfax report, if you saw that it had a flood in 2019, would you want to buy that car? And
Right.
the answer is probably no, because the information on the report shows you that it's a risk to be a loss to you. So that's the same way a bank is going to look at it. If they see you didn't pay collector A, B, and C, $1,500, $2,500, $3,000, are they going to trust you with a $500,000 mortgage? Probably not, if they see a bankruptcy or a repossession. So you want a really clean credit profile. And if you have a clean credit profile, it's going to translate into a good score all across the board. If you don't have negatives and you have positives and you maintain it well, you will have a good score. Another analogy I give people is, let's say we're watching Dancing with the Stars or the NBA dunk contest. There are 3 judges with each of those. And you can't control whether one judge is going to rate you poorly or, a little more harsh than the others. All you can do is execute to the best of your ability. So what that means with credit is, I want you to keep your utilization very low. I want you to pay your bills on time every time. I want you not to apply for a bunch of things at once. Those are the main habits that I want you to have that will keep you maintaining your score well, on top of building positive items and not making anything be late. So that's pretty much how I break down credit. There's a lot more that comes into it, and we will get into that during this conversation. But I really do implore people to have as best a score as possible. It seems like it doesn't matter, but the lower your score is, you will either not get approved or you will pay a lot more for whatever it is. If it's a car note, you can be paying 18%, and therefore you have a $500 car note versus paying 3% and having maybe a $300 car note. Or your interest rate on your credit card might be 18 or 24%, where it can be 0% for 2 years. And then there's also opportunity costs. If you don't get a yes, the money could have made you this entire time. You're losing out on that opportunity because you don't have a good credit score. I literally had a client today that they called me in a panic because they're trying to get their mortgage loan originator license, and it runs TransUnion, and they couldn't get that because of something on the TransUnion report. Now, disputing takes time when you're doing it right, and when you're doing it in ways that are not like shortcuts that are illegal. It takes about 4 to 10 months. So we need to address it urgently and now, before we need it. If we wait till we need it, then we're kind of out of luck. So
how long, if there's a delinquency, or let's say like foreclosure, short sales, things like that, that's on the credit report, how long did they actually stay on the credit report?
That's a good question. So typically public items or anything typically stays on your credit report between 7 to 10 years. But that's not being proactive about it. I'm very meticulous about being proactive on people's credit report. First, it comes to looking at your credit report. And when you look at it, chances are it's not 100% accurate. And anything on your credit report legally has to be 100% accurate, 100% timely, and 100% verifiable. If it is not 100% accurate, we can legally remove those items. Yes, items such as bankruptcies, repossessions, collections, medical bills, late payments, inquiries, anything like that can all come off whether you really owed it or not. I hate to incriminate myself, but when I was younger and not so, disciplined, I had a T-Mobile bill that I never paid. I never gave the equipment back, and they charged me $1,000 for that. I could have really shipped it back, I just was too lazy to do so. And therefore they charged me about $1,000 or $1,500. Now, it was a collection that I really owed that was really my fault. But they wrote it down as Hannibal Collins, Callix. My name is Hannibal Collins, Collins. So even though that was really a T-Mobile bill that I owed, it was not accurate, and they had to remove it. So there's just a lot of consumer protection laws that protect you. Again, based on those laws, the things have to be accurate. and 85% of reports statistically have inaccuracies. If anybody listening comes to me and gets a free consultation, they will literally see, we highlight for you in red everything that's not accurate and verifiable. You'll often see Equifax, TransUnion, and Experian not saying the same thing. And if they're not saying the same thing, that's an indicator that it's not the right thing. If they say your account was open on the 1st, and then another bureau says it was open on the 22nd, that was impossible for that to happen. So you know it's not accurate. And these are grounds to remove things legally.
You can take it off because of that?
Yeah.
Actually, wow.
You might literally see an instance where they say in May, you've paid on time. And then in June, they'll say you're 90 days late, which is 3 months late. It is impossible to go from 0 to 90, to go from being on time to 3 months late in a month span of time. But you'll see stuff like that on your credit report, which is, again, not accurate or verifiable or timely and things like that. And that's what we can use to remove them. So I'll give you guys some homework to do. I'll just name the laws and you guys can look into it, or you can ask me more about it later. But there's the Fair Credit Reporting Act that most of us are familiar with. There's the Fair Debt Collection Practices Act.
Okay.
There's the Fair Credit Billing Act. And there's also the Fair and Accurate Credit Transactions Act. Each of these are hundreds of pages of laws that benefit you, and they determine what the creditors can do, what the debt collectors can do, what the data furnishers can do, and what the credit bureaus can do. And those are what we use to remove negative items legally for customers.
Most people don't know that because they think basically what shows up on your credit report is concrete, right? It's like, what do you do about it? Oh my gosh, I'm stuck. And even if it's inaccurate, you write them in, and sometimes they'll remove it for like a short period of time and then they slap it right back on there, right?
Absolutely, absolutely.
Yeah, I think, sorry, go ahead.
I was going to say it's about doing it the right way. Many people take shortcuts and those will come back to bite you. If it sounds too good to be true, it probably is. The number one terrible thing that I absolutely implore you to never do is what's known as credit sweeps. Because it's a shortcut, it's very tempting to people because it's a quick fix, but it will come back to bite you. That's because the laws allow for you to remove items in 7 days if you've had identity theft. People took that and ran with it, and they faked identity theft to remove items from their credit report, and that's called a credit sweep. But falsifying police reports is either a misdemeanor or a felony, and I don't want any of your listeners or my listeners to do that to themselves and put themselves in that position. So also people have disputed online, which is very quick. You just click a button and you feel like it's done.
Yeah.
Right. What happens with that is when you dispute online, you agree to certain terms and conditions and you waive your rights to arbitration. That's a big word for no reason, but pretty much if they say it's valid, you have no more recourse after that. And often they're gonna just frivolously say things are accurate or verified, and we know full well that it's not. But if you do that, you accept what they determine. But if you do it in writing, you're gonna reference consumer protection laws, and you can just dispute round 2, 3, 4, 5. Then you can bring in the Consumer Financial Protection Bureau, and you can bring in the Federal Trade Commission. Both are regulatory agencies that police the credit bureaus and the data furnishers, and you can hold them accountable. You can also even sue them for violating your rights and making you get rejected or taking your score down or causing embarrassment or anything like that. You can take measures if you do it in writing. The only thing is doing it in writing, they have 45 days to respond each time, and it typically takes 2 to 5 rounds. So that's generally a 4 to 10 month time frame of trying to restore your credit. When you're doing it the right way, that covers bases and things like that. So give yourself some time to take action, be diligent, be persistent, get a professional, or just take the time to learn it yourself. But I suggest people do it the right way.
Do you know how many people, I can imagine, only imagine the percentage of people that actually will go online and do it online, because nobody does anything in writing anymore. So that's so important to actually know that. Oh my goodness. Wow. That's important information. And one of the things that I was actually thinking about is like, when someone is actually thinking about going to buy real estate, they go to the lender first to get pre-approved, right? But you actually should be the first person that they go to, not the lender, but you, so they can check that credit out before they actually even go to the lender.
Myself or someone like me, because often when you go to the lender, they're going to want you to have the issues resolved already. And if you're actually disputing, they're going to make you stop the disputing process, which could shoot you in the foot. And you want your credit good for both your home and everything else that you're doing. And you're going to pay way less. Like just 1 point can be tens of thousands of dollars over the life of your loan that you pay. And the process takes time. So if you're looking to buy, try to start the credit repair process at least somewhere between 4 to 8 months before you're trying to buy your home. And you want to get pre-approved first, but you want to have good standing so you can actually get pre-approved and just go through with the loan. It doesn't really matter. I don't want to say it doesn't matter with the point person that you see says. There's the underwriters that you never get to speak to that are literally going to make the decision on your file, and you're not going to be in the room to explain what happened with this account was this or that. You won't be there to have that conversation. So your credit report is going to speak good. It's going to speak for you, good, bad, or otherwise. So
Yeah.
you're going to correct everything.
Yeah, this is great information. I mean, this is it's amazing because, it's like, yeah, no one actually even thinks about going to look at, a credit report before they actually go to try to get pre-approved, right? At that point, the lender's already seen it and it's like knows what's on there. And then they tell you, okay, this is what you need to fix and stuff like that. And then come back to me and so and so. And sometimes the lenders may even refer you to actually go ahead and try to dispute it online, which you're saying
Yeah.
is not a good thing, right?
Yes.
Did not know that.
Right. I wanted to also say that people have the impression that things are past the point of redemption, or they'll have shame in what their report is, and there should never be any shame in what your report is, and it's never too far gone. The credit score ranges are from a 350 to a 850. Even if you have a 350 or 400, it's just a matter of time and the right habits till we get to where we want to be. Your credit report is a combination of 5 different factors. 35% or 175 points is how often you pay on time. 30% or 150 points is how much of the available balance you're using. 15% is the average length of time that you've had credit. They want a track record. They want to see your track record of having credit. So that's 75 points or 15% of your score. 10% of your score or 50 points is account mix. They want to see that you have some variety. And 10% of your score is new credit or increase. How often you're applying for new credit. Those are the 5 factors that make up 500 points of your score from 350 to 850. So if you have a bad score, it's literally going to be that proportion of each factor. So we just need to correct these things. We need to say, hey, is your payment history off? Do we need to dispute these late payments or get these collections off? Are you using too much? Do we need to bring you down to 30% or 1 to 5%? Do you have your average length of accounts out of whack? Have you applied for too much at once? Or did you get rid of your oldest accounts? Can we extend your age of your credit? Do you have good account mix? Are you having installment accounts and revolving accounts? If not, let's get those. And are you applying for too much? Do you have too many inquiries? Or do we need to stop applying for stuff until you're till you're at a threshold where you can get approved? It's just a habit change that can make a world of difference. And again, this process can typically take between 4 to 10 months, maybe even at worst a year or a year and a half, but you're never too far gone. And everybody that
Uh-oh, you froze on me.
does this in groups, we have things like that, mastermind. Oh,
You're freezing on me.
can you see me now?
Yeah, I can see you, but you're frozen.
Up to 40. What about now?
Yeah, now it's good.
I
Somebody
know
try.
they're gonna edit this. I'm sorry about that.
It's okay. Yeah, we'll have to cut out this part, but yeah. So
I'll rewind back to where I probably got lost at. So it's never past the point of redeeming yourself. I've worked with many credit repair business owners in accountability groups and masterminds and things like that. And a lot of us have started exactly where you started. I started exactly where you started. Not you, just
I know what you're saying though, yeah.
Wherever you are, whoever you are, I started at a 500 score, right? And it wasn't long ago. I'm only 34.
Yeah.
I got my credit right when I was 28. I learned too late. I didn't know that it was important, which is why I'm very bent on making sure that people learn this stuff because we never get taught. So I had a 500 score. I live in New York City. I tried to get my own apartment to not live with roommates. I got rejected for 8 different apartments throughout New York City, Queens, Manhattan, Staten Island, Brooklyn. And the one place that took me was right next door to a funeral home in a terrible neighborhood, right? And I had to pay 5 months of rent to move into a terrible neighborhood,
Wow.
funeral home. And that was really expensive. And I didn't make a lot of money at the time.
Yeah.
So I paid probably at least 40% of my income just to move in, my yearly income to move in. And that's what made me realize that bad credit is expensive. And
Yeah.
I learned too late. And when I learned that, I didn't have the money to pay someone to do it. So I had to learn all those laws I mentioned to you guys earlier, the Fair Credit Reporting Act, the Fair Debt Collection Practices Act, the Fair Credit Billing Act. I read a bunch of books, ebooks, audiobooks. I taught myself it, and I disputed the items on my report, and I took my credit score from a 500 to a 740 in 4 months.
Wow.
Mind you, that was 4 rounds. Back then, 4 rounds took 30 days each. At this point, the rounds take 45 days each. So doing 4 rounds would take me 6 months now instead of 4 months, but all the same, the process is the same. You just have to dispute things that are negative or not accurate. You have to get the right habits and, just tackle it. So it just starts at the first step, you're not climbing the mountain in one step, you're just, taking it step by step and getting guided action and taking action. I mean, it's never too far gone, and don't be too ashamed of where you are. I don't judge any client. Just take action and make a change for your future and teach your children this and your family this, and it goes a long way. So
Yeah. Life happens, and it happens to all of us. And, at some point you just never know, maybe medical or, family members that need, whatever help. But yeah, life happens, and never be ashamed of, anything that happens on there, because it does happen. And then you have a way to actually go through and change the situation. This is great information. And that's amazing that you actually went through that whole process yourself, with the laws and everything. That's incredible. Not many people would even know that. That's why you're the specialist now, right?
yes.
You know
And
exactly.
I'm not perfect. I'm not a perfect human being. No one is. And I actually cried at work when I took my credit from a 700, from a 500 to a 740. So it can definitely happen for you. It's happened for many other people. You just use the laws, you're patient, be
Yeah.
persistent, 2 to 5 rounds, maybe a little more. Some people I've had that, go up to 7 rounds. Some people are way less. But
Yeah.
all the same, you will get through it. You will get past it, especially when you know the habits. It's literally like if a teacher said on Friday, we're getting graded on trigonometry and algebra, you know exactly what to study. So if you do those 5 factors that I said, if you make sure your payment history is on time, if you make sure you keep your utilization below 30%, if you have good account mix, if you have good length of time that you've had credit, and if you don't apply for too much at once, you'll be really, really in a great situation.
That's great information. Thank you so much. One more question before we let you go, because you've given us so much valuable information. As far as in the real estate world, a lot of times when people are ready to actually buy property, they go to different lenders actually to basically shop rates, right? And so these people are
Yes.
actually pulling their credit. What are your thoughts on that as far as a credit score declining or going down when they're doing that? Does that happen?
That happens. Inquiries are 10% of your score, so it's 50 points. So score-wise, it's not a huge detriment to your score itself, but there's an impact despite the score. If you have too many inquiries cumulatively, you'll get rejected or red flagged for having too many inquiries. So we want to dispute any inquiries that you did not get approved for. We also want to keep it to a minimum. And some institutions like Chase have a 5 and 24 rule, where if you apply for more than 5 accounts in 24 months, you'll get rejected for their bank products or their credit card products.
Wow.
So you do want to keep inquiries low, but they understand when you're shopping for a home that you're shopping for a home, that you're doing mortgage rate shopping. Eventually, through time, those inquiries consolidate into one months down the line. But you do want to just try to keep it to a minimum. You want to find a trusted lender, a trusted mortgage loan operator, or a trusted mortgage broker. And go with someone that you resonate with, and they'll guide you through the process properly and educate you and inform you. There's a lots of great ones. So don't be afraid of the process. Just get a trusted advisor. Maybe get some referrals from people that you know. I definitely have my favorites,
Yeah, right.
but definitely find a good one, and don't be afraid to get into the process. I would also say it's not the end of the world shopping around, but the right one should guide you, and maybe even ask them before they run your credit. Hey, this is my situation. This is what I have.
Right.
Do you typically approve people like this? Ask them first before you actually get your credit run. If it's a situation they typically can get people through, then apply. If not, you
Right.
don't. Say, hey, I have a bankruptcy, I have a repossession, my score is a 600. Is this feasible?
Yeah.
If it is, then go through with it. If not, then you know you have to do some work beforehand. And they might refer you to their own credit repair or credit restoration services, or even just places that give you knowledge and guidance. There's community organizations that can give you this knowledge, but definitely be prepared before you go into the process.
Wow. Wow. You are a wealth of knowledge. You are a wealth of knowledge. So grateful to have you on here. Please, anything else you want to share, please share your contact information with us so we can actually have that at our fingertips, because we're going to need you.
Yes. So my name is Hannibal Collins. Again, I'm from FICO Finesse. We have a acuity scheduling link where you can schedule a time one-on-one for any of your needs.
Okay.
It is ficofinesse.as.me. That stands for acuity scheduling. So ficofinesse.as.me, or you can find all of my links at hannibal10k.com. Again, that's hannibal10k.com. All of my links for anything that you need, whether it's our academy where we're teaching you how to build wealth, whether it's our event coming up, whether it's credit repair, whether it's getting a mortgage loan origination, whether it's me referring you over to Pamela. Anything that you need is going to be on my 10K card. So
Awesome. Yeah, we have all his information, and we are definitely going to be able to share that with you guys. Thank you so much for being with us. Any last words? Any last
last words. Be prepared for the process, invest. Yeah, if I wanted to tell you something, it'd probably be like a 2-minute long conversation, but
Okay.
I want people to budget appropriately. Do we have time for me to give people
Oh,
that?
absolutely. Yeah, go for it. Absolutely.
So here is a principle that I totally did not make up, but I live by it. It's not an original concept by me, but I've noticed that wealthy people that I've studied all follow this principle. And it's called paying yourself first. And this is going to help all of your listeners stretch their money way further than it ever has been, even with the same amount of income. So paying yourself first, that concept is about investing first, and the order matters. So anytime you get paid from anything, whether it's your main job, your side gig, whether someone's giving you birthday money, tax returns, any money that you get, I want you to invest 10% first, or I want you to set aside 10% to invest later when you find a great opportunity that is within your risk tolerance. So you're investing 10% first. Second, you're saving 10% as well. If you save, most Americans don't have a nest egg or don't have anything to cover themselves beyond 4 months if something goes wrong, when something goes wrong, which has happened many times over the past few years. So saving is both for long-term savings and spending to reach your goals, to buy a house, a car, a boat, to send your kids to school. So you need to save. So investing is 10% first, saving is 10% second. Then I want you to spend 10% on yourself unapologetically. So for me, yes. For me, it's Brooklyn Nets games. For me, it's travel. For me, it's concerts and things like that. It could be getting your nails done, going to the spa. This is for you unapologetically, for the discipline of sticking to this principle. It's just like if you ate with a meal plan, you have a cheat day. On Saturdays, pizza, cake, ice cream, that's your cheat day. 10% is for yourself. 55% goes to your bills, your expenses, your debt, your car, your home, anything like that. 10% then goes to growth. And between the 10% to invest and the 10% to save and the 10% for growth that I'm talking about right now, these 3 things transform your life. The 10% for growth is anything that makes you better or your business better. So this can be hiring a mentor. This can be having systems or buying systems to put in place. This can be outsourcing and delegating. This can also be things that make you better and not your business better. It can be hiring a fitness coach. It can be hiring a nutritionist. It can be a therapist for mental health concerns. Anything that makes you or your business better and expands your capacity to earn, that's what that 10% is for. And then the last part is 5% to give. Anything that you give reciprocates right back to you somehow, some way. So to recap, 10% to invest, 10% to save, 10% for yourself, 55% for your bills, 10% to expand your capacity to earn, and 5% to give. Last note on that, when I did that 10% for growth, I hired a mentor and my business tripled the month after that and then doubled the month after that, which gave me more money to invest, save, play with, all that type of stuff. So this system, if you budget that way and do that for 4 to 6 months, you should go a lot further than your money has typically been stretching, because your money is making money, make money for you. It's accumulating through savings. It's you investing in being and get more revenue and paying your bills, you giving back, all that type of stuff. So hopefully that helps someone. Let me know 4 months down the line how it's worked for you. Hit me at my 10K card, Hannibal10K.com. Have my number there and let me know if it worked for you.
That's
But
great.
thank you, Ken.
Great advice. Yeah, I'm all about being mentored and being coached. That's me. Although I can have more than one, you know, it's like I need this one for this and this one for that. And I truly believe in coaching and coaches in your life, because we all need coaches, right? Share your information one more time, please.
Okay. So typically it's bad form to give your number, but I will give my number because I want to help people. 718-669-2319. But all of that information is on my 10K card, Hannibal10K.com. That has all of my links. I also want you guys to go to my social media. It's going to be FICO Finesse everywhere. FICO Finesse, FICO-FINESSE. So that's at FICO Finesse. You can find me everywhere, or you can find me at my 10K card, Hannibal10K.com. And I really look forward to working with you guys or giving you guys some insight. And I really appreciate Pamela today.
Oh, thank you so much for being with us. Check out his 10K cards, you guys. It's awesome. And he has actually so much information on there and different things that you can sign up for and get help for. Hannibal, thank you so much for being with us. We greatly appreciate your time today. And hopefully you'll come back and see us. You guys take care. Be blessed, everyone. And we will talk to you soon. Bye-bye.
Bye.
Okay, hello everyone. Pam DuBois, Real Estate TV, Hannibal Collins here with us. And we're going to talk a little bit about video marketing and why we think video marketing is important right now for our digital world.
Video marketing is very important. And I want you guys to tap in with Pamela with Dream Real Estate TV for all of your video marketing needs. It's very important to have a presence. Most customers do not do business with you until 7 points of contact. So as much exposure as you possibly can get to your target audience will be absolutely essential. Wait, I want to do it over because I wasn't looking at the camera.
We'll cut it there, yeah.
I'll do it over, sorry.
All right. All right, you just do it. How about that? You want to just, okay. Hello, everyone. Pam DuBois, Real Estate TV, and Hannibal Collins. He's going to share with us why he thinks video marketing is so important right now in our digital world.
I really want you guys to work with Pamela at Dream Real Estate TV. It's very important to market. I think the presence is very important. Most customers do not do business with you before 7 points of contact. That amount of follow-up is very important. So you need all of that exposure to your clients for them to know, like, and trust you. Most customers don't do business with people that they don't know, like, and trust. And you might not feel like you have to market or be engaged with your audience, but even brands that we know still market and advertise every day. McDonald's, Budweiser, Coca-Cola, Geico. We know them. They're billion-dollar brands and they still market constantly. So it's very important to have someone that's very knowledgeable to guide you towards getting exposure to your target avatar. So please, please, please work with Pamela. She's absolutely excellent. And Pam, take it away.
Thank you so much, you guys. Subscribe to our channel, our YouTube channel, Dream Real Estate TV with Pamela DuBois, PamelaDuBois.com. And then, of course, my 10K card, Pamela10K.com. So I would love to hear from you guys and help you guys and get you to the next level in your business and get you out there in our digital world. Thank you so much. Bye-bye.
Pamela DuBois will make you a star.
There you go. I like that. Okay.